The property market is going to crash. Is the property market going to crash? Well, this is one of the questions that we get asked quite a lot, and I'm sure that you've heard this conversation many times, or you've had this conversation with family, friends, and maybe even your taxi driver in regards to property. Today, we're going to break down what is a market correction, what is a crash, is it going to happen, and how you can weather the storm. Okay, so what does a crash look like? A crash is a significant drop in property prices. It could be 50%, 40%, 30%. A correction is the usual market goes up, corrects a little bit, 5-10%. That's usually how that is, right? We see corrections at the end of a cycle, just like the stock market sees corrections. It happens all the time. It's just how it works. In the world of duality, you can't have up without down, left without right, hot without cold, and so on, right? And we have a boom market, you're gonna have a bear market. So there's that boom and bust. How much and how prolonged that correction is, or slash crash, is dependent on a wide range of factors. Now, let's get into the Australian property market. Let's talk about that and what's the likelihood. Once again, we don't know the future. We can have a look at what's going on today. And I'll tell you what's going on today. I've talked about this in another video, and we're gonna leave a link and we might, show it on the screen, but this is a good one to watch if you're looking at investing in Brisbane. It really highlights what I'm about to talk about, and that is the fact that there is no supply, there is no stock. Now, we all know that there's no shortage of land in Australia. Yeah, fair to say, we have a lot of land in Australia, right? We're practically the size of Europe. So we don't have a land shortage. What we have is a supply shortage. There's a lack of approvals and there's a lack of completed dwellings. There's a few things playing a role as to why there isn't a completed product at the end that matches the demand. Okay, there's a variety of factors there, but there's just not enough stock. It's quite simple. There is plenty of interstate migration for Brisbane, but there's plenty of international migration coming into Australia. That international migration is providing that demand, but supply is being withheld. For whatever reason, I'm not going to get into this video, there's a lack of approvals, there's a lack of completed dwellings, but yet there's migration coming in. And there's already a lot of the Australian population that's already here doesn't have enough approvals or enough completed stock coming to market. So what we're seeing is essentially the perfect storm. The government's inflating money, the Fed's looking like in the US going to zero interest rates. There's a potential collapse of the petrodollar. If you actually have gotten your education on inflation, if there was ever a time you would have gotten that education, that would have been during COVID. You would have seen the increase in construction costs. You would have seen your money, your currency debased, right? You would have literally seen how that works and how that affected property prices and how that demand supply worked. And Southeast Queensland absolutely went off like a firecracker. So when you look at this, the Australian property market is quite underpinned. And I don't want to sit here giving a lot of credit to everyone in Canberra. Actually, I don't want to target Canberra in general, but we're talking about the government. But you know what? They've got this little Ponzi that is real estate firing, and they're doing it well. Now, I'm not bashing real estate. Real estate is our chosen vehicle, but I believe that it's actually set up to continually grow in value. It's like it's perpetually growing. It's quite interesting, and it keeps the economy going because no one wants a crash. So who benefits from a property crash? Well, the majority will not benefit. Only a small minority will benefit from that crash. But overall, economically, we will struggle as a country. Unemployment will spike upwards in a hurry, and it's going to be a tough time for the majority because don't forget, there are something like 8 million loans, 8 million homeowners or something like that in Australia. So when you look at the effects that will have on Australia as a whole, it's quite significant. There may be a few people that benefit from the lower entry price point, but the whole economy takes a hit. It's definitely not benefiting everyone. Now, should you wait for a crash or buy anyway? This is another one that I think a lot of people talk about all the time. We see different markets perform. So there's markets that perform at different times. We see so many cycles. It's not just one. There's no Australian property cycle. There's a bunch of them, based on where we go to invest in. And the way it plays out is property prices keep going up. There's really no backwards market. So I don't see property prices counting the other way. This isn't the Benjamin Button movie, right? It's actually going the other way, right? Just like your lives, it's constantly going in that direction. So I'm looking at it going, well, hang on. If that's what's going on, it's going to continue. When's it going to crash? I don't know. But am I going to not play the game and watch it double again and then double again and then double again whilst you sit there and have your dollar devalued? So your $100 that you earn, pay $30 of tax, for example, and then you get $70. And that $70 that you've got is what you earn. You traded your time for that $70. And then they debase currency. And then the next year, your $70 buys $60 worth of food. Money's a scam. Fiat currency is a scam. If you go down that rabbit hole, you'll learn a lot more about that. But it goes to show that simply an inferior way of looking at it. You know, you can't do that. You've got to buy assets regardless. It's continually going up. You've got to put your money somewhere. Select your chosen vehicle. Our chosen vehicle is property. Play the game while you're here. We're only here for a finite amount of time, and you're only going to see so many cycles in your property investing career and in your life. And life goes like that. It goes so quick. Before I go into the next point, I want to reference this podcast with Scott from Cube Home Loans. We were talking about first home buyers and getting into the market and not waiting. And there was a particular scenario that he talked about with one buyer that wanted to wait for the property market to crash and then ended up buying further and further out, paying more for the privilege. Be careful. The market doesn't seem to go backwards, and waiting for it to go backwards so you can buy is crazy, because even if you buy now, it goes up in value and it comes back down. What's the difference? If you're looking at buying or investing, you're better to get in the market and play the game than not. Okay, so depending on your risk profile, you want to be super cautious about where you're buying, and you need to understand your exit strategy and how it's going to play out. So I'm going to use the example, and I've used this example a few times. Let's say Birkdale or Alexandra Hills. Now, there's a higher percentage of owner-occupiers in these suburbs than in comparison to, let's say, Logan Central or Woodridge. So when you look at the larger portion of owner-occupiers, when there is a market downturn, there's less of a chance that this property market has a heap of properties going for sale. Whereas in a downturn, larger portion of investors that would be, let's say, active Woodridge, for example, they might be living in Sydney. They might go, you know what, geez, business has taken a hit. Let's get rid of the boat and let's get rid of the investment property. And you notice more properties come on the market. This is another risk for apartment blocks that have been sold to majority of investors. These things are time bombs during a crash. So be super cautious of those, and anyone selling you high-rise, off the plan apartments, because if shit does hit the fan, the apartments that have a large portion of renters to owners, right, investors, those will struggle, and you will struggle because you'll struggle to get your value out of those, and you'll run into negative equity at that time. So buying in an area where there are families already set up, you know, it's a large portion of owner-occupiers, families already set up, kids are going to school, private school, whatever. No one's uprooting the entire family and moving for whatever reason, but as long as it's affordable. So that's the caveat to that. So for example, the $4 million market, if there was to be a crash shortly, that would take a significant hit, right? Just like it did during the GFC. But an affordable area that is $800 to $1 million in Brisbane, that has a higher percentage of owner occupiers, that sort of an area is going to weather the storm of a GFC or a more significant crash because of the way it's set up. And the reason I use those examples of Alexandra Hills and Birkdale are just because they are built out. They're not right at the back where there can be extra land supply, right? Where there could be a lot of developers that own stock that quickly need to liquidate, right? And that will affect the property prices dramatically in a hurry. So that's why I've used them as an example. So everything has got to do with your personal circumstances, getting the right advice from your buyer's agent about your strategy that suits your risk profile and your entry exit timeframes. There's a lot that goes into it, and make sure that what you're doing is suited to you and essentially your end goal and what you're looking to achieve from it. So when's this crash coming? Well, no one knows. Fact. No one knows. How do you know? If you know things, you'll be able to predict the future, right? Everything that I can foresee is showing a strong market, but what's going to happen in year 3, year 5, year 15, year 25? I don't know. And I don't know what's going to happen. Is there a crash coming? Yes. In short, yes. But is it in my lifetime? Is it in the next 5 years, in the next 10, whatever? But I'm going to play the game of real estate in the meantime, and I'm going to make money, because at the end of the day, I came into this world with nothing. I leave with nothing except my experiences. So a little bit of philosophy and my opinion on that. But in general, if you need any advice or you want to discuss this further, please get in touch with us. We're always happy to chat. And until next time, take care.